Hi there. ZCash is up by close to 2% as of now, at the very beginning of this week's candlestick. Let's look at it through the Wyckoff lens and see where the whales are trying to bring it to. If you're new to my session, I'll cover the Wyckoff stage, the trend change potential, as well as T-price levels. These are education content, not financial advice. The weekly chart of ZCash is getting to a point where we call that a sign of weakness, this SOW, sign of weakness, in the distribution cycle. So it's somewhere at the middle stage at best, okay? Worst case is getting very close to the end of the distribution. From the very beginning, when I covered ZCash, while it was jumping on the way up to that $700 or close to $800, I already mentioned that it is exhibiting some behavior very close to what happened, not in the 2021 distribution cycle, but the one back in 2017. And I said back then, after the fine climax, the FOMO stage, okay, if it comes down to a very low point, what we call the automatic reaction, may it be people taking profit, triggering a cascade of selling. If it gets back to the long-term playground, this white box, okay, that's where, let me make the line thicker. This white box, the top is here, the bottom is here. If the price comes back down to this level, then it is really copying what happened 8 years ago. And now, look at where the sign of weakness is. It's getting a rebound around the orange T level. Okay? Just one level higher than last time. Last time, this sign of weakness ended around the red key level of $190. This time, when the price came down, it actually touched the red key level 190. Okay, it's almost exactly the same, just that this time it did not close below the 190. Last time it closed below 190 and made the U-turn, giving this relief rally, what we call the last part of supply, before it fully retreats to accumulation. So look at what we have over here. Okay, remember these four, basically two bounces. Okay, remember these two bounces after the automatic reaction. Okay, fast forward to where we are now. Automatic reaction. First rebound. It looks like it's doing a second now. Let's see whether it's going to behave exactly like what it did 8 years ago. Just do a second rebound and then chop a bit before it gets back to the accumulation cycle. For 2 times, both during 2019, 2020, and then 2022 all the way to 2025, the 4th quarter. Both times, the accumulation came back to below the green tea level of $77. The low point of both accumulation cycle was exactly where the long-term playground, this white box, bottom is lying around. So that's above the $10 red key level at around $18. All right. Why there is an $8 gap between the bottom of the long-term playground and the red key level? It is only because of this dip on January 15th, the week of January 15th, 2018. Now that was a crazy drop that haven't been seen afterwards. Okay, that's where the red line is. This time, let's see whether or how far it will come. Will we stop still at the bottom of this long-term playground, or is it going to test even further? So that's the big picture. It still hasn't fully gone into accumulation cycle yet. We're yet to see the panic over stage. So there's still a bit of time. Like I said, if it really is going to rebound, it's going to take a couple of more weeks before we see the price eventually come down. Last time, from the sign of weakness, okay, to that rebound, to the top of that rebound, it took 6 weeks. And from the rebound coming down to this level, it took 37 weeks, so almost 9 months. All right, of course, it's not going to be exactly the same, but just for our reference, we may be getting to that point for ZCash by the end of the year if it happens this in a very similar sense. Like for 37 weeks, it's going to get into November. All right, let's go to the daily view and see what's actually happening. So we talk about these dates. If you are trying to expect a trend change, the downtrend that started back in the end of last year, okay, it drops following the trend. It has missed the 8th. It's likely going to miss the 10th, Valentine's Day, and the 19th. If the bulls are successful in reclaiming the green key level of 275, where the rebound would possibly shoot, they are potentially able to end the downtrend. But like I said, if it really is going back to the accumulation cycle, that is going to last long. The downtrend may start somewhere to the right-hand side. However, if the downtrend, let's look at this in a bigger picture, if the rebound only managed to shoot to the green key level or the light blue key level 305 and then start to come back down, okay, from the current point to the light blue key level, it's around 26%. Not a bad rebound, okay, in the downtrend. That's still the ceiling of the downtrend, okay? Essentially, what it does is that the rebound can happen, but still got restrained by the downtrend ceiling. Okay, let's see whether that would happen that way in the coming week or week and a half. However, look at what's going on in the past 3 days. The price, while the bulls are trying, you look at the wicks. Okay, I'm enlarging, so if you're watching on a mobile phone, you can see clearly the wicks here. There is like the bulls and the bears are agreeing this price level of around 240 is where they are comfortable in setting foot at least for the short term. The volume it's basically around average if you look across the past 6 weeks. Here, when this starts to change, when either side is trying to push, the bulls are obviously trying very hard to push the price to above the 245 yellow key level. But they haven't been successful for 3 days. Actually 4 days, if you look at this as well, this wick from the top. That means eventually if they fail, the price gets shot down to the orange key level of 215, or even lower to the red of 190, like what it did just a few days back. What dates we are looking at if the price really comes down to challenge those levels or trade sideways along those levels? Okay, I have to strengthen this because I want to capture this as well. Let's expand this a little, and then extend this a little further. All right. Here, the yellow key level points to the 24th, getting close to the month end. And the orange, where the price is staying above right now, points to the beginning of March, or you can say by the end of this month. Sometimes, or a lot of times actually, it happens, the breakout confirmation happens earlier than those dates where the ceiling crosses the key levels. However, if it gets to the red, like if the price trades downwards, breaking the orange, that points to the 5th of March. Okay, we have all the February chances. This one is already gone. The 1st has gone. Okay, just these dates. This is very stretched. Still possible. Maybe the base case and the pessimistic case. Worst case, let's leave it for later sessions, okay? So this is the picture for ZCash. If you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another video for you. Thank you.